the FPO proceeds are going to be given back, what will happen to the capex, debt reduction plan, and the entire high growth businesses of Adani Enterprises, which in a sense are the business of the future. So the high growth, high capex which the Adani Group currently is planning obviously will take a back seat, and they will have to revisit and understand that if the FPO proceeds will not kick in, the plan which in a sense, the capital structure plan which in a sense was drawn, and the capital and the growth which was coming largely because of this FPO money, what will happen to that growth? That's part one of the story. Part two of the story, the lenders. Now this is one equity issuance, so there is no bank risk here. The State Bank of India chairman yesterday told us that they have no problems. I mean, Adani exposure is not a problem for India's biggest lender, and that account is that account interest is completely served. But from a market standpoint, since there are some dollar repayment bonds which are dollar repayment bond which is due now on some dollar bond, markets would be observing that with huge amount of curiosity as to what happens. I think from a market standpoint, if today some of the lenders they sell off, that.
All right, so that's the take coming in on Adani Enterprises, but let's talk about earnings. And Shriram Finance also came out with its numbers, where its quarterly, where the NII saw an uptick of about 3% on 8% on a quarter-on-quarter basis. The NIMs also saw an expansion of 25 basis points to about 8.5%. The cost-to-income ratio is currently at 26.6%. But to talk more on the numbers and the way going forward for the company, we have Mr. Umesh Revankar joining us on the show. A very good morning to you, Mr. Revankar. Thank you so much for making our time on ET Now. There's Cheryl on the other side. And let me directly go on to talking about your earnings. And if you look at the numbers, your cost of funds have actually come down, and so have the spreads. Where are you seeing the cost of the borrowings, and why are the yields low for your company going ahead?
Yeah, basically it is a better utilization of funds that help us to expand our net interest margin. We were carrying a 6 months liability requirement as a cash, which we have reduced last month, where we have done some buyback, and also we have paid back on large quantum of international borrowing, that is ECB bonds. So that has helped us in improving our net interest margin. Otherwise, the quarter-on-quarter or month-on-month, our cost of borrowing has not gone up from the last 2 months or 3 months. So that also has helped us. Overall, we're able to raise resources at the current level, in the sense 3 months back level. Plus, we are also repricing some of the older loan, which were at higher cost as and when it's maturing. Especially 80% of our borrowing is in the fixed tenor and fixed rate, and only 20% is floating. So floating gets changed immediately whenever there is a repo rate change, but the fixed one changes only when it gets matured.
Right, Mr. Revankar, this is Vinny joining in the conversation as well. What I want to ask about is your disbursement growth. That has been strong this time around. Now, how should one actually view this in terms of the risk on this incremental book, and will the credit cost actually continue to trend lower then?
Yeah, definitely the disbursal is very strong. The demand in a commercial vehicle, two-wheeler, especially last quarter, was the festive period, and therefore the demand for two-wheeler was very high. And the rural demand has come back very strongly. The tractor credit, even though we do only mostly used vehicles, the demand in the rural area has come back very strongly. And commercial vehicle continues to remain very strong, because as the infra spend continues, there is a demand for CVs, especially both new and used, and we are able to cater to the demand. So I think the growth is looking good even in this quarter. And as far as the credit cost goes, since the vehicle utilization levels are very high and resale values of the vehicles are quite good, the credit cost automatically comes down, because the risk of non-payment is less, Plus, the requirement of reposition also is very minimum. With that, the credit cost is coming down. I think it will remain steady at around 2%, which is our long-term history of 2%. We are just below 2% now as for the first 9 months. It's around 1.94. We should be able to maintain at this level going forward for the considerable long time.
Right, Mr. Revankar. Do you actually plan to raise any money from the market given the new amendment for the interest on market-linked debentures? So do you see this as an instrument as a concern going forward?
No, that was, see, we did not use this instrument extensively. It is a very, very short, small portion of our borrowing. So we will not be impacted by that. We can always have other privately placed NCD. We need not really go through MLD essentially.
Okay, Mr. Revankar, thank you so much for joining in with us on ET Now this morning and giving us your insights on what should we be expecting from the company going forward as well. That is Shriram Finance for you all. As of now, the stock is trading with a decline of 1.8%. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with your stock-related queries after this break.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. We are live on YouTube, Twitter, as well as Facebook. You can write to us live on those platforms, or also you can write and connect to us via our WhatsApp number that is flashing on the top of your screen. Remember, they do only message on the WhatsApp number. We will not be able to take your calls. Do mention your name, the stock that you're looking to invest in, and if you already invested in the stock, then do mention the buy price as well as the quantity and the time horizon that you're intend on holding the stock, because with that our experts will be able to help you better. So with that, let me bring on board our experts for today. We have Kunal Bothra as well as Sharmila Joshi joining us on the show. A very good morning to you, Kunal, once again, as well as good morning to you, Sharmila. Thank you so much for joining us on the show. And a brand new month, Sharmila, hoping that this month doesn't transpire as much as the way how January actually panned out, given the fact the amount of immense volatility that we had seen in that particular month. Given the fact that we are in a brand new month, we already have an event that has passed through, we have a lot of news flow that's affecting the market sentiment. What should retail investors do to protect their wealth?
Interesting question. I think this is a really difficult market as we have seen over the last month, and some of those difficulties seem to be behind us now, because we had a lot of events going into January. You had the quarter numbers being declared on the domestic front, plus you had a lot of international news to sort of digest, and then towards the end of the month we had this whole FPO issue as well as the budget being played out. So I think, very honestly, at the moment it might be best to be on the sidelines for a couple of weeks and allow market to stabilize, because I think that we've been through such a roller coaster over this last week that it would make sense to allow markets to gain some kind of stability. Because yesterday, even after a good budget, we saw the kind of correction that there was in the market, largely probably because some amount of news had started doing the rounds regarding Adani Enterprise, and that took its toll on the market. So now that all these issues are settled, plus we've had the Fed meeting out of the way, and we've had budget as an important exercise out of the way, I think we should just allow market to sort of regain its sort of mojo for the next 10-15 days, and then take a call from there. And then again, I think obviously the advice would be to buy good quality stocks and to continue to do an SIP on them. Of course, I think the good thing that one can say at the end of all this is that a lot of stocks, and I think the market as a whole, given the fact that we haven't done anything for the last 3-4 months, the sort of valuations which were looking very very high are now slowly coming to reasonable levels. So I think that would be the positive takeaway. But I still think it would be best to just wait for a bit before you start buying, even from a longer term perspective.
Okay. That's the advice coming in from Sharmila on the markets. How should one investor look at actually protecting themselves from the volatility? But let's get started with all your stock related queries. You can WhatsApp it to us or send it to us on YouTube or our Twitter link as well. But let me start with the first query coming in for you, Kunal, and this one is no guesses. We're going to talk about ITC. So we have this query coming in from Mitra, Kaushik Mitra, and they want to know that, the volatility that we saw coming in on the budget day as well. Now, what are the charts actually indicating for ITC today? It's trading at a lifetime high, but what should we be expecting? Because they're holding it from 300 levels as of now for ITC.
Trust me, ITC and the word volatility are something which we don't associate with, the stock as such. But the last 2 days of price action indicates that from the 325 recovery for the stock to now 380 plus levels where the stock is trading right now, I think it's a very strong, sturdy recovery. But then you don't have to, you can't just isolate the last 2 days of price action for ITC. What we have to look out for is the start of the stock price trend from 2022 when the stock was at 225 odd levels. I think that's the time we got into a bullish territory for ITC. I still maintain the bullish stance in ITC. I think over the last few months, I projected a target of 400 plus for the stock. I still maintain those targets for the stock price. So I would still believe that traders who are looking to buy the stock and hold on to it from a longer term play, I think they could still use current levels as well as any kind of opportunities of corrections as good levels to accumulate.
So let me just add on to that query then. We also have Ashili Anthony, who's purchased at 326 rupees per share. She wants to know when should she book profits. So are you advising for the short term you should stay put with it, not think about booking profits at least in the near future of 3 to 6 months?
Absolutely, I think you should stay put with it. So I don't know what's your time frame which you're looking out for, but if you're happy with say 20% kind of a returns, then that's a different ballgame altogether. But then if you're looking to accumulate wealth over a longer period of time, then I think you should definitely look to stay put.
All right. Then let me take the next query coming in from Sri Kutan, and this one is on SBI. He's bought it at an average price of 445 rupees per share. Sharmila, he's holding it since 2021. He's ready to hold it for the next 2 to 3 years, but he wants to know, should he continue holding it? What's your advice for the next 2 to 3 months? Hold, exit, or add more?
I think continue to hold, and you could also look to add if market corrects more, because I think if there are 3 banks which I like at this point in time, they would be HDFC Bank, ICICI Bank, and SBI. Of course, I think for very different reasons, HDFC waiting for the merger news to play out, ICICI Bank because numbers have been good, and I think SBI is a sort of a leading from the front for the entire recovery that we've seen in the PSU space, and obviously all the other merits in the numbers. So if you're a long-term investor, I think obviously the strategy is to hold, and if you do see the stock correct, then definitely you can add more.
Okay. Kunal, this next query we have is coming in on Gland Pharma. This is from Ilango from Dubai. They're holding 1,000 shares of Gland Pharma at around 1,931 rupees per share. Currently, obviously, it's making a loss for them. What should they be doing with it? They should look to sell, hold, average. What's your view here?
See, I think right now is a time where you should look to hold on to the stock. If there is a possibility, then I would suggest that you go for a slight bit of averaging at current levels. Now, I understand that Gland Pharma is a stock which has corrected very sharply from 4,000 levels. The stock is almost at 1,200. So there's a very sharp erosion of capital over here. But then I think just looking at the pure indicators, the RSI, the structure of MACD, ADX, etc., it indicates that the stock is entering into an oversold territory. So there could be a strong relief bounce for the stock from current levels. So if you're looking to play for that kind of a bounce, maybe a 15 to 20% kind of a bounce from current levels, then I believe taking slight bit of risk over here and averaging could be a better strategy.
All right, this one is from Ram Sankar, and this one is for you, Sharmila. And we saw what happened to the defense names yesterday, given the fact that the defense allocation was much less than what was anticipated. So he wants to know what would be the future for defense stocks like HAL as well as BEL on lower budget allocation. He's at minor losses in these counters. Should he use this opportunity to buy more, or what sort of strategy should he adopt?
I think the specific stock is HAL, right?
BEL both. So you can talk on either one of them.
HAL and?
BEL. Bharat
BEL.
Electronics.
Okay. Yeah. So I think HAL I think is a definite hold. If you look at the numbers and the businesses that they are in, etc., I think that this stock for me would continue to be a hold. Where BEL is concerned, their numbers haven't been that great, and again, I think in terms of defense play, it may not be the best stock, because in that sense, I think HAL is a better bet. But of course, I think what he's also worried about is that the allocations were lesser than what was expected. But I think honestly, for me at this level, both these stocks are a hold, because BEL I like from a sort of a valuation fundamental perspective, and HAL I think is doing well. So I think both stocks for me at this point would be a hold.
Kunal, this next query is coming in actually for L&T. Now, Carol had actually made some profit in L&T, sold the shares, and now she wants to re-enter this. What is the best price to actually re-enter L&T now?
So, the last 3 or 4 days, the stock has bounced quite consistently from the 2080 mark on the spot levels. Now, if it's a very short-term kind of an entry which you're looking out for, then I think closer you are to that 2080 levels is a good entry point for L&T. Broadly, I believe that if the stock holds on to this current levels, 50 DMA thereabout, plus or minus a couple of percentage points, then the structure of L&T could improve and the stock may get back into a scheme of making new highs for itself. So I think short-term entry point could be closer to 2080, but the structure would probably be dependent on whether the stock holds on to this current level of 50 DMA, say over the next couple of weeks.
Okay, on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with your stock-related queries after this break.
जब पापा को पता well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 20.
Welcome back, and you're watching Buy Now Sell Now on ET. Now let's keep it going with all your stock related queries. This is a very interesting query, and Kunal, I'm going to take it to you. This one is coming in on JB Chemicals. It's from Kuldeep Singh from Punjab. They are holding the stock since 1986, somewhere around. The purchase price was 29 paise. Obviously, they're making a huge amount of profit already. What should they be doing with this now? Should they continue to hold, add, shift, sell? What is your view on this?
I think congratulations to the viewer. I think holding on to the stock from 1986 to currently, I think it's been a brilliant multi-bagger since those single-digit or double-digit paisa stocks for JB Chemical. I think at current levels the charts are looking very attractive. I don't see any major reasons why you should be looking to exit the stock. I think my belief is that you should just hold on to your investments which you have already had for JB Chemicals.
All right, this was coming from Santi and Ami Organics, or Ami Organics is the counter. The query is asked on Sharmila, 63 shares at a price of 950 rupees per share. What Santi is saying that all chemical stocks are in bearish trend for the last few months. So he wants to know whether it makes sense to hold on to Ami Organics or actually look to add some more just before they announce their Q3 earnings, which is scheduled on February 4th. And he also wants to know if the fundamentals are intact with this particular company.
I think it's not as good for chemical companies as they were maybe
Actually, we'll get back to you, Sharmila. I think we have you on a bit of a patchy line. So till then, let me take another query to you, Kunal, instead. Satya has HDFC Life. He's holding at a levels of 560 rupees per share for the period of 6 months or so. What is the strategy that he should be adopting to minimize the loss? Also, what the next question he's asking is something that you will not have a say on, is whether what the government has done or what the budget has come out with, will that particular development be rolled back or no. But yes, on the charts, where is HDFC Life headed, given the fact, no doubt, it is reacting to a news-based information right now?
So yeah, news-based information, the stock has corrected very sharply. And I think over the last many months, we've realized that HDFC Life has actually been an underperformer as compared to the other two insurance stocks. So for example, SBI Life is something which we've been time and again recommending as a more formidable stock, and that stock has held on to the the recovery as such over the last 1.5 odd year. Compared to that, HDFC Life is one of the first stocks to make a fresh 52-week low as well as a multi-month low for itself. So that is one of the reasons why I think buying HDFC Life would not be a great idea. I think at current levels you have to wait out for a point where the stock gets into any kind of a reversal phase if you're looking to average. As of now, the correction would just I would say continue for the stock sometime over the next couple of days. Maybe the stock can hit levels of 460, 465. That could be a point where you may look to start averaging out, but then buying on higher quantities is something which I would not advise for HDFC Life.
Right. Sharmila, I believe we have you back. Would you want to continue with your view on AMI Organics?
Yes. So, as I was saying, the China one factor is definitely not being playing out in favor of chemical companies. And so now you have to be a little bit more specific. So advantage for AMI Organics, in my view, is that it's a dominant player in some of the pharma intermediates. And while I think earnings are sort of subdued, so the call is a little neutral right now on the stock. But if it's a long, it is a long that he continues to hold.
Okay, Kunal, this next query we have is coming in for you, and this one is on Trident. Subrata Ghosh from Delhi has Trident from ₹5. They've started buying it at that level. They went on buying till ₹50. Now they're currently holding 20,000 shares at around an average price of 41. Should they add more, or what should they be doing now?
I think you can just continue to hold on as of now. Adding, I would recommend maybe if the stock comes back to the sub 30 mark. That's a point where I believe over the last 8, 9 months or 10 months particularly, the stock has been taking good support. So just below the 30 level is a good point to average the stock. But you can hold on to the stock. What has actually happened is because of the very sharp recovery from the 2020 lows, when the stock was single digits, to at a point when the stock was almost 10x in 2021. That's one of the reasons why the stock is going through a time-wise as well as a price-wise correction. So you can continue to hold on. But I think if you're looking to average further for a classic entry point, sub 30 could be a good entry point.
All right, so that's the view coming in on Trident, but with that, actually, we will have to wind out on the query segment right here. Thank you so much, Kunal. I can see Kunal is relieved with the fact that we are done with the query segment. Thank you so much, Sharmila, as well, for joining us on the show. And yes, viewers, we've had a truncated query segment today, given the fact that we are still in the thick of the earnings season. We have a lot of management joining us, and shortly we will have the management of Raymond as well joining us on the show. But before we go to the management of Raymond, let's take a look at what the stock price is doing currently, given the fact that one also has come out with its numbers, where the revenue has seen an uptick of 17.6% on a year-on-year basis. The profit, however, has come in low by about 5.4% on a year-on-year basis at around 95 crore rupees. And the EBITDA margin also has seen a downtick of about 21 basis points on a year-on-year basis, coming in at around 14.7% on a year versus 14.9% a year ago. So that is a Raymond for you. That is in focus in today's training session. But let's go on to the management of Raymond. We have Mr. Amit Agarwal, who's the Group CFO of the company, joining us on the show. Very good morning to you, sir. Thank you so much for joining us on ET Now. And let me actually talk about what your plans are going ahead. You're planning to roll out approximately 80 ethnic wear stores under the brand Ethnix by the end of FY23. Could you tell us what are the demand trends that you're witnessing in Q4, given that there are still a lot more wedding dates in Q4 this time around? And also, if you could tell us, will Q4 indeed be better than Q3?
So if you look at it, I don't want to be giving any guidance in terms of saying whether this will be better or worse. However, I can tell you that you are absolutely right in terms of saying that there has been a significant, or there will be a significant number of wedding dates in this quarter, which enables us, with the reach which we have created and we continue to create for our Ethnix brand, that we are getting a very good traction because of the design, the kind of products which we put in place, the kind of fabric. So I think we are seeing a very good demand for our ethnic product. And it is a beginning, so it will take time to get to a very strong revenue with a large collection. So progressively, and during this whole year, we have opened almost 49 stores across all our formats. And even in the last quarter, we opened 24 stores. So I think we are quite bullish in terms of having the store expansion. And looking on this, we are able to cater to the markets for the demand which is going to be out there. And it is not just limited to this quarter that the weddings are strong. Even spilling over to the April, May, June, we are seeing also the wedding number of days are quite strong.
Good morning, Mr. Agarwal. This is Vinny joining in as well. And I want to talk about cotton prices. They have corrected. Freight cost, that has cooled down recently as well. But we're not seeing that impact actually coming in and trickling down on the margins in terms of improvement in margins. So how many quarters do you think it will still take for the margins to actually reflect the benefits of these lower costs? And by when do you plan to achieve the targeted 17 to 18% on margins that you have given?
So if you look at it in terms of a margin, if you see in our branded textile, which continues to be very, very strong, where we deliver more than 20% margins. And if you see in the apparel business, once again, if you see, we have been consistently improving and we have reached to a double digit with 11% plus margin, which is again a very healthy margin. Even in the garmenting business, which is export led, we have improved our margins. So if I look at across our businesses, we are seeing the margin. However, if you see the cotton price impact, we are into the retail business, in the branded retail business. So you don't see the correlation happening from today to tomorrow, because what happens is consistently we have been able to consider a price increase, and it is largely driven on the retail market demand, because I don't want to just go unnecessarily and create a significant increase in the price of our products, which will prohibit the volume. So therefore we manage this very tactically so that we maintain a growth in the revenue. And that is what we have been doing. And if you see, our margins have been doing well. Only thing is in the B2B shirting, which is where you have to see the going up in the cotton prices or going down in the cotton prices, you pass on quite quickly. And that is where you will see the change in the margin happening. Rest, all the businesses, our focus with our retail distribution and our cost efficiencies, OPEX cost management, we have been able to improve the margins.
Mr. Agarwal, now let's just talk about trade agreements and FTAs. Trade agreement with Australia came into force in December. We're seeing a meaningful progress coming in terms of the FTAs in UK and EU as well. So what is the market potential that you expect to be unlocked after these FTAs, and already with Australia you're seeing the trade agreement?
Oh, this is phenomenal. We would have, today we are in a disadvantageous position compared to our neighboring countries because of the lack of the FTAs. Now, once that becomes available, we have the skill set. You see, with the suits capacity which we have and the way we are expanding, we are going to be in the top 3 players in the world in terms of the suit capacities and delivering suits into the marketplace. So therefore, I'm seeing that it has a huge potential and brings us much more cost competitive compared to our neighboring countries, because today we have a disadvantage on that account. I think as a country, we should be able to easily double or triple the volumes over the next 5 to 7 years.
Okay. And in the past few years, when you look at it, the demand and supply for affordable housing has seen a dip coming in. But now with the PM Awas Yojana, the outlay being increased by over 66% to 79,000 crores, do you see more developers move towards that affordable housing? And would you be looking at catering more to the space as well?
See, look, we believe, you see, the definition of an affordable housing as per the income tax has 2 restrictions. One is a 60 square meters and the other is a 45 lakhs. Our focus has been clearly in the MMR region, and you won't be able to buy anything for a 45 lakhs of rupees. So therefore, what we are talking about is an affordable luxury. And the true testimony for us is that we have been able to deliver 3 towers out of 10 towers in the phase 1 2 years ahead of RERA in the December, which itself is a demonstrated performance. Second thing, if we talk about our sales velocity, we have been able to do almost 75% of our total inventory of the phase 1 has been completely sold out. So therefore, I think if you give the right product, right configuration, right amenities at the right pricing, you will be able to sell. So we are not seeing any kind of a sort of demand which is lower.
Also, so what about, you've already received the SEBI's nod for the IPO of your engineering business. That's JK Files back in February 2022. Earlier, you had mentioned that, you would go ahead with the IPO when the market conditions would stabilize. With February 2023 now upon us, can we expect the IPO announcement anytime soon? What's the outlook there?
So we continue to engage with the bankers, and there is obviously the possibility of extending the filing and doing some bit of a work in order to get it done. Because for us, the primary reason for doing this was an offer for sale to reduce the debt at the Raymond Limited. And if you look at our demonstrated performance, that we have been able to reduce our debt in this quarter once again substantially. So we are at a 930 crores, which is less than 1 on a debt to EBITDA, 0.3 on a debt to equity. So to that extent, I don't want to come out an IPO where the valuation could be a challenge. So therefore, what we want to do is to look at the market and time it properly so that we get the right value for the business. And we continue to grow the business. As you know, that the domestic market, especially on the domestic car segment, automobile segment has been very, very strong. And we being one of the large players in the ring gear segment, we are benefiting clearly out of that.
Okay, Mr. Agarwal, thank you so much for joining in with us on ET Now, giving us an understanding of how the demand trends are and in terms of the IPO for your engineering business as well. On that note, we're going to step into a very short break. Viewers, don't go anywhere. We'll be back with more updates after this break.
₹5 right now. After 5 years, it may cost you ₹100. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you ₹25 right now, after 5 years, it may cost you ₹100. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue with earnings. And we now have the management of Jindal Steel and Power joining us, Mr. Bhimlendra Jha, who's the managing director of the company. A very good morning to you, Mr. Jha. Thank you so much for joining us. And let's talk about the price hikes and what's happening in the steel prices. We've already seen the steel prices going on an uptrend once again. A lot of price hikes have already been taken in the month of January. Are we likely to see some more price hikes going ahead?
So actually, if you look at last quarter, the steel prices have been relatively stable. It is only towards the end of December that the input cost of raw materials started rising quite sharply. And you would have noticed that there is a high rise in coking coal prices as well as NMDC prices of iron ore have gone up. And all that is happening is that the steel makers are trying to pass on these increase in costs to the consumers. Other than that, there has not been any other major increase in steel prices on its own. It is merely a pass-through.
Right, Mr. Jha, but what about your margins? They've seen an improvement on a sequential basis, but now coking coal prices again have started rising again. So does that impact the margins going forward in the first half of FY24, given that there's a lag effect in coking coal prices, the impact there?
Different steel companies have different stocking policies. We do not keep any long-term stocks with us. We are not speculative as JSP. And therefore, we very much have a reflection between price and cost quite quickly, because we have probably one of the lowest inventories in the industry.
All right, Mr. Jha, we leave it there. Thank you so much for joining us on the show to talk about, briefly to talk about the earnings as well as the price price hikes taken by the company. But with that, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Vinny. I will be continuing on for Market Signals.
Wow. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.